Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Sonali Basak, counting you down to the closing bell. Here to take us beyond that bell with a global simulcast. Joined by Carol Massar and Katie Greifeld in for Tim Stanovic. We go cross audiences we do each day, Bloomberg TV, radio and YouTube audiences, to dissect what has been, well, muted movement, searching for direction, but really some deep movers underneath the benchmarks, Carol.
Yeah, I think that's a really good point. It's like what happened to the earlier rally. It does feel like we are waiting for some indication about what the economic data points, in particular that Wednesday inflation print, tell us about the way forward, especially, Katie, when it comes to Fed policy.
I did find some movement. I'm looking at Bitcoin right now, up almost 3%, about $24,000 a coin. Had to go there. And it is a little bit interesting, I swear to God, because if you look at the NASDAQ 100, it's actually lower on the day. So a little bit of a break apart between Bitcoin and big tech.
Crypto winter's over, Katie. You heard it here first.
It's sunny out here.
A Russell 2000 that's now up more than 1%. A clear divergence between big and small. Don't certainly want to make too much of this on a day-to-day basis, but all of sort of the FX headwinds that we've seen a lot in this quarterly earnings season at least comes to help benefit some of those small cap, more domestically focused stocks. And that is indeed the sort of big winner on the day too.
Yeah, it's interesting to see the Russell 2000 still up on the day, given that you see inflation expectations cooling. Presumably, that is good for smaller companies. The question is, how long does that win out, and will there be sustained pressure on that part of the market as we see people flock to safe havens here and there?
Is 8.7% cooling enough? It's still high. Still high. Meanwhile, S&P 500 is not on the high side. As we count you down with the bells ringing across the New York Stock Exchange and the NASDAQ, it is a day where the NASDAQ underperforms and the S&P 500 too, but only by 0.1%. We're off by 5 points in the S&P as they ring the bell. We're currently at 4,140. Volumes were pretty flat on the day there as well. And the NASDAQ off by 0.1%. Now, you had more than 2,000 of the NASDAQ advancing, only 1,200 on the decline, but the declines were big enough, hefty enough, with enough market capitalization that we did drag it lower. And even as volumes were up about 15%, we saw overall the Dow Jones Industrial Average have more advances than decliners, so we managed to pull up about 0.1%, 28 points to the high. But really shining its light is the Russell 2000, Taylor, as you pointed out. And Carol, it is a small cap kind of a day, up more than 1%.
Yeah, that's a pretty significant outperformance. I love that you went inside the NASDAQ. I'm going to go inside the S&P 500 just a little bit. 318 names in the index, higher, 183 lower, 2 unchanged. But Taylor, just a reminder that even with the S&P flat, we had a lot of names, the majority of the names in the S&P 500 outperforming today.
And you really see that on the sector level too. Carol, I'm really glad that you brought that up, because look at all the green on the screen for the radio audience. It's auto, it's retail, it's media, up about 0.6% to almost 1% gain on the day. And there's a little bit of some outperformance even in the quote worst performers that are green. But then take a look at what's dragging us down. It's banks, it's software and services, it's semiconductors, it's some of the tech hardware equipment. So all those sort of big tech cap names are everything that's really holding down this market. You're off anywhere from about 0.6% to actually 4.5% on the day.
All right, so two major themes that definitely caught my attention in the trade today, and that has to do with the meme stocks and then the alt and green stock energy space, if you will. Let's go to the meme stocks, Bed Bath & Beyond. I mean, we've been talking about, I know you guys, I'm assuming too, that meme stock frenzy definitely back in a big way today. Bed Bath & Beyond just alone up almost 40% in today's session, up 63% at its highs, but nonetheless, some way out performance, up about 140% over the past 9 days. The company's strongest winning streak ever. It is still down about 20% year to date, and we did see some pretty heavy trading volume. I just want to check the short side of this. 42% of the float is shorted, so just something to note. Also, because of the Senate moving ahead on climate legislation, of course, big legislation, the Biden economic agenda, if you will, but the green energy space really outperformed. Tesla among them, up 6% at its highs, still just finishing the day with about a slight gain, up about 0.8%, but top of the NASDAQ 100 and the S&P 500. Tesla also striking a deal worth about $5 billion to secure nickel supplies from Indonesia over the next 5 years. Nickel, very key when it comes to battery production, lithium-ion batteries. And then I just wanted to mention Lucid Group. That stock was up almost 4% in today's trade, again, benefiting from that Senate passage over the weekend. So we've seen some really outperformance of these names, Katie.
Well, in addition to memes and sort of the clean tech sort of area of the market, chip weakness, also a big story today. Of course, that all comes back to NVIDIA. We know the story, quarterly revenue missed by more than $1 billion. The magnitude apparently surprising investors because NVIDIA shares finished over 6% lower. The company said that was due to a slump in gaming, and it's really dragging down the rest of the industry. You're looking at AMD as well, finishing over 2% lower. And the big benchmark level, when you look at the Philadelphia SOX index, also finishing lower. And I did want to highlight Tyson Foods because we are still in earnings season somehow. Tyson Foods, it's the biggest U.S. meat company.
They Disney said on Wednesday, don't we?
I know.
Okay, sorry.
I'm working my way up there. But in any case, Tyson Foods, it said that inflation is hitting sales of chicken and pork. You have Tyson shares falling by quite a bit today, about 8% or so.
Yeah, and actually we saw perhaps a little bit of rising again in the cattle costs. If we're looking at commodities that go cross-asset for our global audience, the macro movers shines a light on the fact that actually WTI crude did manage to push to the higher side, but it's still only at about $90. Remember, we had the worst week for oil since April, so today maybe a little bit of a bounce higher and more of a story of dollar weakness, but Brent crude up 1.4%, $96 is where we trade. Natural gas, though, pulling back hard, 5.5% lower. That says maybe we see production up a little bit, but also the incredibly hot temperatures in the US just dialing back that little bit. Heat wave may be coming to an end. I'm looking at the foreign exchange market, and actually, as we see perhaps oil push high, you have Canadian dollar, the loonie on the strengthening side, Aussie dollar, Kiwi also strengthening. This is, we see actually some China trade data coming in better than had been anticipated. And I look at a sovereign bond market that is, well, very mixed. We see yields pushing higher over in the Asian trade, but actually here in the UK and in Europe, maybe gilts actually coming down 10 basis points. So money moving into the bond market, Taylor.
You really saw that in full faith and credit back here in the US as well. It was sort of a bond price higher, yield lower kind of day all across the curve. The difference, though, today is instead of a lot of the movement in the front end, a lot of the movement today actually was in the end of the yield curve, sort of the longer end, going out 10, 20, 30, when you think about almost 8-9 basis points lower here on the day. I want to hit something that's a little bit lower in terms of a full year guidance. Take a look at shares of Novavax, cutting full year revenue to just $2 to $2.3 billion. They had seen estimates of $4 to $5 billion, and the average median of that was about 4.18. So really seeing a cut here to guidance, I think, and Carol, you've been all over this, some of the halting in after hours as well earlier on the stock as we'd awaited some of the news. So really looking at vaccine sales that are slowing down, and indeed now a loss per share as they're reporting in the second quarter of $6.53, well ahead of estimates of earnings per share of about $5.24. So something is going on, not only on the income, but within that sort of margin income statement as well.
You do also wonder how much of it is due to the COVID-19 vaccine that had just started to roll out a few days ago, and you've seen a lot of reports about a sluggish start as a result. Looks like we've got some other earnings. Take-Two is also out.
Yeah, we'll take a look at Take-Two, and as we bring you to Take-Two, we're going to take a look at, again, the after-hours trading of Take-Two. It's down 3% already as the full-year adjusted EPS falls well below estimates, $4.60 to $4.85. Estimated was $5.37, Caroline.
Yeah, let's have a look at what's happening overall with Take-Two. Of course, gaming company adjusted revenue, $1 billion. The estimates were $984, so a slight beat there. We're seeing full-year adjusted revenue at $5.8 to $5.9 billion. That's well ahead of expectations. The adjusted earnings per share coming in a little light, though, and as you just mentioned, the adjusted earnings per share, $4.60 to $4.85 on the year, is, you know, sub where the market wanted to see as of $5.37. So as we see sinking significantly after hours, more than 7% lower. Maybe we should have anticipated this. NVIDIA in high exposure to gaming. And of course, in large part, that was an underwhelming earnings statement that we got from NVIDIA, the big chip maker, spilling into what Take-Two is having to say to the market now.
And not a direct one-to-one correlation, Caroline, we've been talking about this, but with Roblox as well, when we think about just some of the gaming sector that's underway, some of the, we'll get those quarterly results, I believe, maybe tomorrow. When you think about sort of a sector and maybe a classic reopening trade, if we're all gaming, and not only then the supply of chips, but then the end user and the demand that does or does not come from that, Katie.
Yeah, it definitely seems like the mood music over that entire industry really darkening just in the past few days, tying that back to what we heard from NVIDIA, for example, today. And Take-Two really taking a bath here, down 7%. It's already down over 29% heading into today's close.
Yeah, and how much of this is as, the world gets out and is traveling and doing other things, and how much of this is just a result of some of that. All right, guys, that's a wrap. That's our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. We will see you again, same time, same place tomorrow.